going on here, and crazy. Getting ready to get started here in just a second here. Just give me one more second here. All right. Sorry for that rough start there. Crazy few days here in the market. You look at the last few weeks of trading, the market's been down about 3 weeks in a row. Not been an easy go of it for most traders as this market's pulling back. And it's really, up until that point, it's really lulled traders into a sense of complacency because it just felt like all the market did was go up, up, and up. And in some cases, nobody had even really seen since the beginning of 2003 more than a 2-week pullback on the NASDAQ. So this is definitely starting to throw people for a little bit of a whirl. You got a lot going on right now. You got Bitcoin crashing. You've got AMC getting destroyed. You got retailers like Dick's and Macys getting torn up. And we're all wondering, are we going to get a little bit of a market bounce here? We have crashing bonds right now. Yields are soaring. There's a lot to talk about, a lot to go over. So we're going to talk about all that. Plus, I'm going to go over your questions. I'm going to take everything that you guys throw at me. We're going to go over your charts. We're going to go over the stocks. I'm going to give you my opinions and what I see going on with those charts there. So make sure to post those in the chat. If you haven't done so yet, make sure to like and subscribe down below. And check out swingtradingthestockmarket.com. If you like what you saw today and you want more of my stock market research, you can get it all by going right there. Let's go ahead and get started with Bitcoin. Bitcoin for a long time this year, well, for the most part this year, it's been getting hyped up a lot. A lot of people are getting excited about Bitcoin, and they're starting to talk about, going from 30,000 to 40,000 to 50,000. And then all of a sudden you found out that SpaceX was essentially liquidating all of their Bitcoin holdings, and the crypto goes all the way back down to 25,000. It was a big, big sell-off. Let's look at the charts here to see what we're looking at going forward. On the Bitcoin front, you do have this rising trend line, and for a long time, it was holding up very well. So when it came back down and tested this level, it instantly broke right through it like there wasn't a care in the world. So it pushes right through it. Now, what do we look at going forward? You have also this double top pattern here. You have a first top, and then you have a second top here that's formed. And then you have a huge level of support underneath that we want to keep a close eye on. So as this sell-off continues to steepen and get far worse, where's the level of support that I would be looking at next? Well, we're sitting at 25,851 right now. I would be starting to look at support at 24.7. 24.7 has a lot of support. That goes all the way back to 2022. So it's about a year-old support right now that we're looking at. Now, if this one fails to hold, then what are we looking at? Then remember that it seemed like it was forever glued to that 19,000 level. Yes, that's what we're looking at. Another move back down to 19. Now we could see another big news event that takes it down to there and breaks through this blue support level right here that goes back a year. And if that happens, yeah, I'm looking at this $19,000 to $20,000 level for a potential bounce. Right now, I don't like crypto on the dip buy. I know that a lot of people are buying it. They think that, they read the articles about how it's going to $100,000 or $200,000. I think that's, not in the here and now and not something we should be concerning ourselves with. Really what we should be looking at is where is the buying opportunities at? And I don't see it right now at 25,000. I think possibly 24.7. If that can't hold, then maybe 20,000 or 19. I also talked about the retailers. The retailers are getting smoked right now. Let's take a look at Dick's following their earnings. All right. So on the Dick's Sporting Good front, you have this rising trend line. That is demolished, okay? And that didn't happen just yesterday. That happened back in May. But what's been interesting about this broken trend line, this white line off of the May lows of last year, is that how many times it tested it and was rejected by price. So you have this rising trend line that was broken, and on multiple occasions we tested it and it failed. I'm seeing you there, Skyhard and Black Mamba and Auto Tool Experts. Great to have you. Same for Ricardo. Thank you guys for joining me. On the DKS front, you also have this short-term rising trend line. What's the point of all this? Because clearly we just blew right through all of this stuff. You also have this huge support level going all the way back to beginning of 2022, January. And That's been blown through, down 24% today. Why do I bring that all up? Is because you can't trust earnings reports. I know the temptation is to hold everything through earnings, but when you start to do that, you put yourself in your swing trades at a huge disadvantage, because if you get something like this, and it doesn't happen with every stock, but the ones that it does happen with, it can ruin your entire trading year, if not your entire account. So going into earnings, I understand why some people were probably optimistic about their earnings, because it is just trading. If you look at this purple line going back to March of this year, this purple line was offering up some resistance, but it was trading right at it. You weren't seeing any heavy rejections, and you probably thought to yourself, if it can have a good earnings report, it's going to break through. Probably what you weren't thinking about is, what if it has a bad earnings report? And that's what you got here with DKS. You got a bad earnings report, you got bad guidance, and now it's trading, instead of at 146 where you could have gone out yesterday, it's trading at 111. And so where does the next level of support? There's not a lot. And one of the things that a lot of people will say to me is, they'll ask me for my thoughts on a stock after the fact. They get into a stock, they find themselves down 40% because they aren't managing the risk, or 50%. And they said, oh, what should I do here? Well, I know what you should have done, and that's to plan the trade, to manage the risk. And if you're not doing that, when you're down 50%, I don't know what to tell you. I really don't, because at that point, there's really, how do you manage the risk? How do you manage the risk after you're already down 50%? You're already realizing how much risk that can be assumed on a trade. And so right now, that's what a lot of people are doing. They're becoming bag holders, and a lot of them will be holding this bag for a very long time. You have essentially like a triple top pattern that's in place here. First top, second top, and third top. I'll even draw it out for you guys here. First top, and it really doesn't matter which one's the first and second one. We'll call this one the second top. And then this is the third top right here. So that got confirmed with a massive gap down. Now, yes, you got a huge gap that remains unfilled. That may happen at some point in the future, assuming, that DKS continues to offer their services in the years to come. I mean, I don't have any reason to think that why they wouldn't, but yeah, that gap will probably get filled at some point, but it could take years for it to happen. And then what's the time opportunity cost by staying in a stock that's losing you a lot of money over the time period? So with DKS, don't like anything I'm seeing it. You also got Macys, and look what Macys has done. And of course, this has been happening a couple of times here on these live streams. We cannot get, there we go. Look at Macys. You're essentially breaking out to new lows here, to new recent lows, just by a little bit, but still enough, down 14.5%. This is also another reason too why you want to be cognizant of competitors and their earnings reports. So for instance, NVIDIA is reporting earnings tomorrow. I would be cautious about being in a stock like AMD. Yes, NVIDIA could have another blowout earnings like what we saw last go around, where the stock did like 30% higher. That's going to help out a lot of your semiconductor plays. But it's good to be aware of the potential downfalls. If NVIDIA disappoints, my gosh, right now they're essentially priced for perfection. They better have a really good earnings report, or you could see, if it comes in disappointing, a massive sell-off. And if that happens, then stocks like AMD, stocks like Intel, they're probably going to get hit pretty hard from a swing trading standpoint. So you want to be aware of competitor earnings, because stocks like KSS, for instance, took a hit today, down 10%. And look at this. We had a rising trend line on Coles, broken. You also had a retest of that broken trend line, and it couldn't hold it. And then you got the break to the downside. So for Coles, where am I looking at for potential support? Probably around this 24.25 level here could be where it eventually comes back down to. Far cry from the 28 that it was just trading at yesterday. Going back to Macys, where's the next level of support at? There's not much underneath, and that's indicative of a lot of stocks right now. And the reason why we're seeing some heavy selling in a lot of stocks is because they had these massive run-ups and they didn't create much support when they were making these massive run-ups. And as a result, there's not a lot of support to fall back on. Yeah, you could still see that $12.97, $13 level come into play, but there's a good chance too that you might be looking at more of a move down to the single digits on Macys. And that would be unfortunate, but it's very possible here. Let's see here. What else do we want to talk about? Dillard's, DBS, another one. And to Dillard's credit, man, this company's been doing pretty good. I mean, I go into a mall and I never see anybody in there, but Dillard's is hanging in there pretty well. So kudos to them. Now, you also have a rising trend line, and this might be the only play if you start seeing these department stores bottom out tomorrow. This could be the one to play right here. DDS could try to hold this rising trend line off of 321 and start to bounce higher back into the 350s, 360s, assuming that the market can give us a little bit of a bounce. Market's extremely oversold. I would expect something here pretty soon here. Question from Black Mamba. Does Macys move indicate a recession? I mean, I think what a lot of people are reading into some of these sell-offs that we're seeing in the retail section right now is that the consumer's getting tapped out. If you look at the credit card balances that people are carrying, we're at over $1 trillion nationwide. It's the highest that we've ever been. I think the average person has like a credit card balance of somewhere in the tune of like $5,000 to $7,000 per household. That is a ton. People aren't paying off their credit cards. They're driving up more and more debt. Some of it's understandable. I mean, I don't encourage people to use their credit card balances, but if they have no other choice and they're trying to put food on the table, I kind of get why that would be happening. Inflation continues to go higher. So, yeah, I think that when people are having to choose between Macys and getting dripped out on clothing, or whether or not they're going to go to Aldi's or Food Lion and put some food on the table, I would like to think that most people are going to choose the latter and not the former. All right. Next topic that I wanted to talk about here. Let's look at the yields real quick. The yields have not been anybody's friend of late. So taking a look at TLT, the yields continue to go up. If you're looking at for fixed income, yeah, I mean, you're getting some good returns there right now. I know a lot of people are getting over 5% on their bonds and stuff. So really good there. TLT trying to hold this level right here. This is what I'm watching the most here. This goes back to the October lows. If you break this level, it can get really, really ugly. You go back from a historical standpoint, we've already long ago broken this rising trend line. This goes all the way back to 07. That was a big deal that we broke that level. And you can see the years of zero interest rate policy. That has caused TLT to skyrocket. Now that that's not necessarily the reality anymore, it's causing TLT to come way down. And so if we break this next level, then we're possibly looking at TLT going all the way down to this 84 level. Oh my gosh. But there's not a lot of other support levels in between the October lows at 92 and where we're currently sitting at about 92.23. So about 91. Yeah, about just below 92 is not a good thing for this market here. We're sitting at 93.23. Good recovery, good bounce today, but that thing needs to do a little bit more improvement going forward. Now, what about the 10-year yield? Is this thing skyrocketing? Yes, we got a little bit of a reprieve today, but it wasn't much. 10-year yield down about 3.3%. But you're looking at as high as the October highs were, where the market bottomed out at. If this breaks through, that could be a very big problem there. You could see something break in the system. What else? Oh, guys, this is where a lot of people get mad at me. When I start to talk about AMC, people are very passionate about. And I've gotten a lot of grief about AMC in recent days. A lot of people are very passionate about the stock. They think it's rigged. My first question would be why are you trading a stock that you think is rigged? If I thought a stock was absolutely rigged, I would not trade it. I would not go anywhere near it. I also, if I'm going into a stock, I'm going to use a stop loss so that in case it was rigged and I didn't know about it, I'm going to get stopped out early on rather than seeing my investment, in the case of AMC, go from $9 down to $2. So there's no reason to be holding on to these things. These are pipe dreams. A lot of people are trying to what happened in 2021. They missed out on it. They want to be in it again, or they were in on it and they failed to take the profits because they got too high of expectations, as if it could have met those expectations any more than it did in 2021. So AMC is falling apart from an equity standpoint. Do I still go to AMC? Yeah, I like going to their theaters. I think it's a great place to go watch movies at. I even have that AMC pass where you can see as many movies as you want each month. It's great. But from a stock standpoint, that's really what I care about. What I'm looking at on the charts, it's not good. So looking at it here, AMC what we got is some major resistance that has been a sell point for the stock all along. Back in about late to mid-August, July 24th, this was your sell signal right here. We got right up here. It got rejected. You saw a big gap down. No reason to stay in it at that point. And for good reason. I mean, it can't break through this resistance. Then it breaks through this next layer of resistance. And now we try to retest it. There was another failure. That should have been your red flag right there when it couldn't break through that in the early goings yesterday. Get out. Now you're looking at about a 50% decline almost from where it was at just on Friday afternoon to where it's trading at right now at $2.55 per share. It goes back to the talk about DKS and some of these others. When you hold through and you don't manage the risk, you get to this point. How do you manage the risk? I don't know, because the risks should have been managed much earlier. That's why it's so important to plan out your trade. If the stock doesn't go your way, and you should always assume that the trade will not go your way. I go into every one of my trades expecting to lose. Why is that? Because I know I can lose, and that I can lose in glorious fashion if I'm not managing the risk. And on AMC, people are not managing the risk, and they're paying for it right now. And they're getting on to me. They call me on StockTwits that I'm a paid poster, that I'm short. I don't have a position in AMC. I'm not a paid poster. No one's ever paid me. I wish they would. That would be great. Man, imagine every time you send out a tweet, you get money for it. That would be wonderful. But no, I'm not a paid poster. But it's so obvious with AMC why you have to manage the risk. And now we're seeing it in just full blow up right now of why you got to manage the risk. So, all right, let's look at some of your questions here. I'll get off my soapbox. Oh man, I can feel my blood pressure rising when I talk about that stuff. What do I think about Tesla? Was today's move price rejection of the resistance around 238? All right, let's pull that sucker up. I've cleaned up this chart a little bit lately. I think it needed some of that. You have some resistance right around here. This is a layer that I think is pretty important. This goes back to October of last year. You can see where it tested it right here on November 1st, rejected, goes down, comes back up, breaks through it. Then it came down to here back in June, held it, rallied. Now we broke back through it, testing in the underside of it. So it's not a solid resistance or support level, depending on what side price is on, but there has been some notable rejections in the past. Very, very possible we see it break through. I think this market still has a little bit more upside to it to get a little more bounce out of it. And if that happens, you could see Tesla. Tesla's been pretty strong here the last couple of days relative to the rest of the market. So it could easily break through this level and maybe even make a challenge back for that 290 level, depending on how long that rally lasts. I don't think the rally is going to be a major rally. I have my doubts whether it can get up to that 290 level. I expect the market maybe to rally another like 1% to 2% before the bears start to try to jump back on it. Remember, we got a lot going on this week. You have Jackson Hole. You have NVIDIA earnings tomorrow. Those are two big catalysts that can really cause either, unbelievable joy or unbelievable hurt for traders and investors alike. So this level right here, this 240 level, yes, that's going to be resistance, needs to get back above it. To the downside, I kept watching to see if we're going to get this 290, 209 level, 210. Never did. Didn't quite get to that level of support where it was testing that rising trend line, which is kind of a shame because that would have been a good bounce play. So I never took any trades in it just because this level needed to get tested, and it never did. All right, Black Mamba, rates keep going up. Someone is lying. Bitcoin equals risk off. As long as rates are up, crypto down most likely. So you got a lot of things going on. One of the biggest debt holders of U.S. debt is Japan. Guess what's happening? Their rates are going up now. They're allowing their rates to go up. And as their rates are going up, their yields are becoming more attractive to their investors. And as a result, U.S. yields are becoming less attractive. So what happens is yields in the U.S. have to go up in order to attract investors overseas to keep buying U.S. debt. So that's one of the big things. Also, the possibility that interest rates will have to stay higher for longer. You're also seeing inflation kicking back up. There's a lot of different things that can be happening there. Ricardo, I do remember you, buddy. Baba, JD, and Apple. Okay, we'll knock these suckers out here in Not in lightning round fashion because I hate everything about Jim Cramer, but we'll knock these suckers out here. So you got a rising trend line here on BABA, BABA, stock symbols for those tracking at home. Holding this trend line so far, this is really the level that you want to be watching here. I'm not too worried about that resistance or that support underneath. This is the support level that I'm closely watching. Needs to hold about 87. If it breaks below 87, and more importantly, if it breaks below Friday's lows, that's going to be about 86, 86. That becomes very bearish. Hasn't really quite gotten that bounce that you're looking for. I wouldn't mind playing BABA here. The only issue with playing Alibaba from a swing trading standpoint is the headline risk. You get some crazy news that comes out about United States and Taiwan. That could cause a whole big mess for BABA. So there's headline risk. We've seen headline risk with a lot of these Chinese stocks for about 2 years now. I won't really touch the Chinese stocks, have no desire to. But if it can give you a little bit of a bounce, yes, there's the potential for like a move to 101, 102 before it hits any resistance. Also going to need market help along the way. Apple. This support level held it for a long time, and then Thursday it broke back down below it. Not doing a very good job there. Now we're closing just right on that support level. Can that support level hold? That's what I'm following here in the coming days. You could see a rejection there. If you see the rejection on Apple at this 177 level, then there's a good chance the rally in the Qs is done and over with, and Apple's going back down to 168. So what we may see in the broader market tomorrow and in Apple and some of the other big tech stocks is a holding pattern from Wednesday until Jerome Powell speaks Friday morning at Jackson Hole. Let's see. And then you had JD. This is another one of those Chinese stocks. Got to be careful because the volatility is a little bit crazy on them. JD isn't my favorite. And I'll tell you why here. You have a little bit of a narrowing channel there, almost like a bear flag in the grand scheme of things. If you're looking at it from where it used to be trading back in early 2021 at 106, now it's trading at 33. It's been the series of higher or lower highs and lower lows, and right now it's attempting to put in that next lower low. It's holding the support at 32 so far. This is the support I'm talking about. So far, so good there. But in the meantime, while it's holding it, it just confirmed a bear flag to the downside. So which one's going to hold out? Is it support, or is the playing out of this bear flag going to be the main driver? So you could see a bounce off of this 33 level that maybe takes it up to $36, $37, but ultimately, until this declining trend line actually breaks, I don't see a reason to be overly bullish on JD. Yeah, NVIDIA is a major event. It's going to set the next leg higher or lower. I think it'll have a huge impact on semis as well. Semis, it's going to be a big deal. Thank you, No Way, man. I always appreciate your encouragement. Elf Beauty has a crazy 5-year chart. Let's look at Elf's 5-year chart here. Holy shnikes. Oh, it always catches you off guard when you look at it from like a long-term standpoint. What in the world is making this sucker tick, man? So you got, you talk about like not having much support underneath. Where's the support on this thing? I mean, you got little minor, points here like 96 and maybe at 76 and again at 56, numbers that end in 6. Not to be conspiratorial or anything, but goodness, I could just as easily see this thing coming all the way back down to the 30s. Why not? I mean, I got to find out what these people actually do. I don't know anything about Elf Beauty, but what a freaking chart, right? Huge base breakout. I bet you if you were playing this base breakout, you had no idea what was about to come your way. Wow. Okay. Nike. Look at this sucker. So what I don't like about Nike is this little continuation triangle. Continuation triangles work in both directions. They can be to the downside of an existing leg downward, or they can be to the upside. In this case, you got the double top right here, the first top, second top. You got the leg down, playing out that whole double bottom, but it might not be done yet. So all sorts. This actually works pretty well with technical analysis, this chart. So this white line here, that's where the double top confirmed. You can see where it's tried to break back above that level here as recent as June, and try to do so again in late June. Could not do it. Formed this triangle pattern. Now it's breaking to the downside. Where's the next layers of support? There's not much. So even at like 103, which was the lows from June, that didn't hold. So now you got to wonder, let's see, got maybe another rising trend line I haven't really talked about much in the past. Let's look at this weekly chart. Is there something that we can hold out some hope for? Be honest, man, I'm not seeing too much hope on these things. I would probably just go off of this rising trend line. This goes back to 2020, those 2020 lows. Possible that it goes all the way back down to 90, especially if this market takes the next leg lower. Good evening to you, Shadow Aviator. Good to have you. Lewis, let's look at some stocks here. BAC and RUN. And you cannot get much of a break out of these big banks right now. I mean, they are ugly. Look what Lewis is serving up here, though, man. Some good technicals right there. You can see where it's testing this declining trend line there and this converging rising trend line right here. So two different trend lines here. I'll highlight them with different colors just so they stand out. And if it was going to bounce, this would be a good opportunity for it to bounce. Yes, down 2.4%. A lot of people are getting rattled by the banks because of that Fitch downgrade, but they're getting very oversold. You look at like Goldman Sachs, for instance, it's nearing this rising trend line as well. This goes all the way back to June of last year, over a year old, very close to it around, but 316, extremely oversold. I think it's down 12 out of the last 13 days, has not bounced in quite a while. So there's a brewing bounce here for the big banks. You look at XLF, it's coming back down to this rising trend line, going back to the March lows that started the whole banking crisis. You could, yeah, I would probably draw it like that. I think that's probably the most accurate level there. I think this second blue line can get out of the way here. So there's this purple line we can get rid of. We can get rid of a lot of charts right now, or not charts, lines. The less, the better. So watch this level about 33.50. Can that level hold and give us a bounce on financials? If so, then we might be looking at a bounce on not only GS, but also BAC as well. What about RUN? Not RUM. RUM would be fun to have right now, but not RUN. We're talking about RUN. All right. So you had originally this bearish-like wedge here that was forming to the downside. You were getting new lower highs, but you weren't getting very steep lower lows. And as a result, you get this narrowing wedge that allows for a potential break to the upside, which we got here in July. And that looked really promising. You even had an inverse head and shoulders pattern here that confirmed the move as well, with this left shoulder, head, and then right shoulder. And then it completely fell apart. So again, another good reason why you got to use stop losses. It ran into resistance at this 200-day moving average. That's this white squiggly line here. Tried to break it back above the 200-day moving average, couldn't do so. So now we're looking at whether or not this support level following that rejection can hold. This is a critical moment for RUN. It needs to hold that 1390 level. Actually, not the 1390 level. It needs to hold 1349-ish. And if the big thing is, does it close below that level? And if it does, that becomes a big problem. Thoughts on Jackson Hole? Hawkish, dovish expectations. I think I lean hawkish. The last meeting that he did, he really used that to knock down the market, something bad. Last August, everybody was expecting big things from him, that he was going to be extremely dovish. He came out there, usually it's a long speech. He came out there, maybe talked for like 2-3 minutes, and all of a sudden the whole market fell apart. He was very stern, very serious. The market's freaked out at it. So I'm wondering if he's going to use it as another opportunity to drive the markets lower, to scare the market so that he doesn't have to raise interest rates yet again. And if he does, there could be a rally, not a rally, but a sell-off in the market. So really keep an eye on that Jackson Hole. That's probably concerns me way more than any earnings report right now coming out, is that Jackson Hole speech. Jerome Powell is such a loose cannon, for instance. You never know what he's going to say, and he frustrates me a lot. I think he's the worst Federal Reserve chairman we've ever had. I mean, the fact that he went on 60 Minutes and during 2020 was like, yeah, just add zeros to the bottom line. We can just add money to the money supply. We are hurting in this country because of his policies and all of the spending that's going on in DC as well over the last 40, 50 years, but even more so over, probably the last 23 years specifically. But it's coming to a head. And we had all these years of ZERP, and that's not helped anything either. So I'm hawkish. But if I'm wrong, just manage the risk. Short KRE for Black Mamba. Okay. Okay, so this is the regional banking. Got it. Yeah, regional bank's not anywhere I'd want to be right now. You also have this rising trend line. That looks broken today as well. So yeah, that's not a good one. Market is sending warning signs, I think. Look at the bank earnings. That confirms more customers are carrying balances and pay interest to banks. Yes. Agree, Skyr. AMC always making. Yes, sir. What is today's whiskey score? I don't have any whiskey today, man. No, I don't. What did I pick up? Still Austin from Total Wine. Wasn't bad. Pretty cheap. Yeah, I think it was pretty good, actually. Still Austin. Markets haven't reacted to the high rates. Equities are going to suffer. There is no good. Yeah. There's no good risk alternatives. Short-term bonds aren't bad right now. I mean, a lot of these short-term notes that you can get into. I mean, some of them are paying like 5%. Oof. All right. Yes, everyone hit the like button, man. Appreciate that, man. That really does mean a lot to me. Honestly, when I say it does help me out. It really helps me out. Ryan, thoughts on coin? Wrote it to 55 to 110 at 99. Flip short. 60 is my target. Stop at 90. Let's roll. Holy cow. Let's digest that one for a second. And to Jose Rodriguez. Yes, I got like four different bottles of it here at the house. Not the flex or anything. I got the single barrel, the straight from the barrel, the private equity, I think they call it. And then there's another one. The golden reserve. Yeah. They're pretty good. I like them. They're really tasty. I think they're way overpriced though. So, okay, let's look at this coin here. Scoot my head up a little bit above the question there. I should have done that a while back, but 55 to 110. That was amazing. At 99, you flipped short. Good grief. You pretty much own this stock, dude. Not own it from a buy standpoint. You're pretty much its daddy, it seems like. Jeez. Yeah. Okay. So essentially how I would play it is if it closes above this declining trend line, I would close it out. But right now it's just following it almost perfectly. Good grief. So yeah, you're getting this bounce. But if it kudos to you. I mean, that's a good short. But yeah, if it closes above it, then I would be getting out. That's how I play it. Wouldn't be opposed to taking some profits along the way either. Good stuff. All right, guys. Good session with you here today. We covered a lot of stocks here. We talked about the retailers. We talked about AMC. Market bounce. I don't necessarily think we've seen all of this market bounce yet. I think we're still heavily in overshort territory. Market can fool me. It can fool everybody. That's why we got to use the stops. That's why we got to manage the risk, because if we don't get the bounce and market surprises us with further downside, we got to be ready to react accordingly. So with that being said, looking at maybe another 1 or 2 days of a market bounce would go into the Jackson hole, and really anything's possible there. So thank you guys. I appreciate all the questions. I appreciate you guys like and subscribe. Check out swingtradingthestockmarket.com if you want more of the stock market research. I do videos every day for the members of that. So check that out. Really good stuff. Thank you guys, and God bless.